Hey everybody, what's going on? Jamie Setley here. It is September 5th, 2018, and this is the Midweek Strategy webinar with Jamie Setley. First of all, can you hear me? Seems like everything's working, but let's make sure. Test, test, test. Can you guys hear me? Can you see the chart? I'm showing the US dollar chart here first. Sounds good, says Mark. Okay, great. JS says good morning. Good morning to you. Before I start, if you did not see the note on the members homepage, just so you know, Michael's out. Well, the rest of this week for sure. Hopefully he'll be back soon. He is just, I'm not going to go into details, but he is in the hospital. So, you know, clearly not going to be around this week. So if you're sending emails or anything, might be a little slower getting to them. Simply having one of us, you know, a lot of times he'll take care of some of the email stuff. So again, he's out this week. Hopefully he'll be back ASAP. And yeah, just wanted to let you know that. So it'll be just me this week. And not sure about next week, but you know, he'll be back again, hopefully sooner rather than later. All right. So let's start with the US dollar. This is the chart from last night. Was thinking again, remember that we had maybe a flat from here, and a flat, right? You get a rally, a drop, a lot of times to a new low. And then the origin of wave B is exceeded in C as it was here. Ty says, will I be doing the dailies this week? No, I will not be doing the short-term webinars. I got to stick to my bread and butter here. But let's get back into the market. So what we've got, we were looking for maybe resistance up here on the median line. Did not get it, but we did get the little kind of, you know, fourth, fifth wave we were talking about, right? This drop. Okay, that was into essentially Asia. A lot of this, you know, is going to be the Australian dollar on the GDP number. And then we got that ramp higher into Europe, and now we failed. So it is certainly possible that this is actually done in a flat, right? Even though we did not get up here. I have a feeling this is probably close to a 618 though. So, and it's pretty close, right? Kind of slice through it a little bit, but you get the idea. So have to kind of, you know, respect the possibility here that we're entering a third wave or a C wave, but either way, the third wave in a cycle on the downside in US dollar, right? Ty asking, is a flat a fourth wave continuation? Well, flats can be either second waves or fourth waves or B waves. And in this case, the thinking is that it's either a second wave or a B wave, right? Because this would be either A or 1, and this would be either 2 or B, okay? And implication being that this is either 3 or C. My belief is, you know, again, if the flat is correct in its interpretation, I'd be thinking that we're entering a third wave to the downside, right? Because we've got, well, a massive rally from January, and we hit major resistance. So I'd be looking for a bit more deeper drop than just 2 equal legs from here, okay? So again, kind of looking at the dollar in the context of, you know, maybe rolling over, or maybe it has already rolled over up here. All right, so let's keep that in mind. Something else that we want to be aware of heading into September here are seasonals. So we got a new month, and you can see that after this week, we actually enter a pretty bearish period for the dollar, especially on the longer term charts. Shorter term, it's a little different because we've had, for the most part, last number of years, we've had mostly a dollar bull trend underway, right? So, the 5-year and the 10-year seasonals are going to be not quite as negative as, say, the 30-year seasonal chart. But either way, we are at a peaking point for seasonals in DXY. All right. Taking a look at some of the others, we can also, I can run the stats on these too. Some people like visual, some people like to see the numbers. So pull up the numbers. You know what? I'll just do euro dollar because that's what we would be trading. So if we get to euro, you can see that since the euro came in to existence trading wise, right? We've got 16 months or 16 years, 16 Septembers, and we've got 9 ups and 7 downs, and average winning trade 393 pips. In other words, average up month and average down month 389. So, not a huge edge there, but it is slightly positive on euro. Let's say if we go to DXY and look at it, let's see, because we'd have more data here. So in this, it's a little different in that we're looking at 43 years of data. Okay, so 43 Septembers, 24 down, 19 up. So a bit more of a bearish bias than, say, euro bullish bias since 1998. Can also look at cable, of course. 43, 23 to 20, not a huge edge. But you get the idea, right? Is that we do have the potential kind of, especially it's, again, seasonals are just one part, as we know, of the equation, but we're entering, if we're kind of making higher lows in things like the euro and a lower high here in the dollar, added up to the seasonals, you have a nice combination, if you will, for decent downside here, right? All right. So there's our deal with the dollar, with US dollar. If you look at DXY, I don't think there's a ton of color here. I will say that I like, so if this is, say, this can be the opposite of the euro, but let's say we've got a 1, 2, 3, 4, 5 down. And the count's a little different, right? But the A, B, and then 1, 2, 3, 4, 5, C. Okay, and do like that we did, take out or tag the former 4th wave high there for DXY. Retracement's kind of, it's a 50% retracement, so it's not necessarily a fib retracement. I would pay attention to the 618 on DXY, and that will go for euro too, which we'll look at next. You can see where the 618 of this rally, it actually is right on, line with the low from August 22nd and the high from the 29th. Okay, it's going to be 94.93. So it might be a short-term spot to pay attention to, and that will bring us to euro. So let's go there. So again, this is the exact opposite of DXY. We got the 1, 2, 3, 4, 5 up. And then since then, you can count 1, 2, 3, 4, 5, 6, 7. Okay. This is important because it could be a flat, or not, sorry, it could be an ABC down, right? So A, B, and then 5 lower in C. The reason this is quite important is because, look, if we drop to a new low, then we'll have 5 down here, and it would kind of complicate it a little bit in terms of you'd probably have a longer ongoing correction on the downside. What I mean by that is Ty asking a question, can I get a picture of DXY? You sure can. Just give me a minute here and I'll go back to it. But you'd have you'd have, again, 1, 2, 3, 4, 5, right? That would be A. Then you'd probably get a bigger B, and then you'd get a C. So a lot depends here, I think, over the next couple of days in terms of wave structure, say, for test. Someone just said they lost audio. I'm actually not seeing that on my end. It does seem like it's actually working this time. Audio's okay, says Marco. Okay, all right, well, I'm just gonna continue then. So yeah, a lot of this sets this up, I think, for wave structure, potentially for like the rest of this month. You know, I just tweeted out this chart. Again, this is hourly, so you can see that the euro tagged 200 hour right up at 1640, and 618 of the drop here, it's gonna be 1655, so a little higher. Again, I would watch near term here, basically 116. You know, zooming in on this, all we're looking at here, so we're doing kind of the same thing with the really short-term parallels that we've done with the longer-term parallels, you know, back off the February, March highs and all of that. And if you look at this channel, right, look at all the lines you cross, kind of the important levels you cross, right, a lot of these levels. So, you know, you had resistance back here on Labor Day, right where we thought we would actually, 1628. We dropped down to a new low, and actually bottomed right on the channel extension. So again, you take the width of this channel and extend it down, and you got a reversal right off of that. And you also bottomed right on the former fourth wave low, like to the tick. So, right. So these are all positives in terms of, you know, maybe having this actually being a low potentially. So where I'd look, not just over the next couple hours, but over the next day or so, is that 116 area, but really it's just this line, okay? Right, so that line in euro is where you want to be looking and seeing support hold, okay, just because of its importance essentially over the last week or so. All right. So yeah, that's, you know, I'm not going to go too much into it. That's pretty much it in terms of euro. We want to see 116 hold, okay? You know, sometimes there is, I'll say there's risk. I hate the FOMO, right? Everyone talks about fear of missing out. It's just a bad way to think about trading. But there are times, rare times, when it actually is appropriate to maybe be a little more aggressive in terms of, because upside it could be so big. And this is one of those times because, again, this turn up from here, from yesterday's low, would be potentially the third wave in the cycle from this low, right? So you got a 1, 2, or an AB. We'd be talking about at least 2 equal legs up from here, which if we do the math on that, 113, 117.30, so 430 up from 1530, you're talking 1970, you know, which is in, you know, you're talking 370 pips from here, basically, 350 pips actually, where we are now in 1620s. So, you know, I probably will see how the day shakes out, but 116, you know, that area is probably one where I want to see, where I'll probably be putting an order in to buy assuming we hold up the rest of the day, right? There's a lot going on right now, you know, quite newsy, of course, political, not just in the US, of course, but we've got the Brexit stuff going on too, seemingly never ending. And if we hold up, 116 will be a spot where we'll want to be buying euro, and stops, you know, I think could be pretty tight, really, probably below 1570. So, you know, able to get not just tight risk, but really good reward to risk, and solid entry possibilities here with euro. All right, moving on to, let's actually look at dollar Swiss, which we're running a short right now. Really like this setup, this trade. We talked about this a good deal last week, in that, you know, after you get a move like this, and it's always frustrating because our entry on the short was like just missed, right? Back here in late August. However, what happens is that, you know, one of the great pluses or great benefits of median line analysis is your points of reference, right? And having a point of reference to enter a trade that, you know, you might be afraid to enter because you think it's extended, right? You don't have to worry about that as much because you've got the median line where you're okay trading into that, and where also you've got, you know, tight stops. So it's like, the point is you don't want to, you know, you don't want to chase, but at the same time, you have to kind of straddle between chasing and between, you know, not doing anything and being scared to enter a move because it's a trending move, right? Well, in this case, we've stopped right where we should. I love this action on dollar Swiss. I mean, look at how beautiful the 25 line here, being, you know, resistance back here and support back here. The median line, of course, we just entered on it yesterday. And the 75 line, we bounced from there too. That's great, right? We bounced there on August 31st, get this rip higher, and now we're in the trade, and hopefully, you know, we can go break even relatively soon. I'd like to see us drop under the low from yesterday, frankly, at 96.87 before I tighten the stop, because you don't want to tighten the stop, you know, too quickly. Of course, if you do that, you risk just getting taken out by a meaningless, you know, spike or bounce or whatever, right? So the target on this is still going to be down here. This is 95.24. I've got it 95.30, of course. Really good, you know, level there. It's the 618 of the rally up. It's also the lower parallel. You're going to, you know, intersect there in a couple of weeks. Of course, you know, if the market gets quick and we get a quick move to the downside, maybe we get there a little earlier and kind of spike below it, take this out, and then rebound within the fork. But yeah, good spot too. I mean, you've got, you know, March 30 low, kind of some resistance up there around March 9th. So you get the idea, right? Simply a, you know, decent entry, and the idea, of course, is minimizing risk quickly, but we won't do that, or I won't want to do that until we, you know, get down to that 96.87 low from yesterday. Okay, all right. So there's dollar Swiss. Cable, obviously probably the story of today, right? You've got British pound. So I was sitting here yesterday. Where's the chart I had posted yesterday? Nah, sorry. I actually think I deleted some stuff anyway. All right. So we had, my thinking yesterday, right, was that we had the 618, and then essentially this low here, right? We were thinking that we'd get a bounce from there. I did not think this would happen, but again, you know, it's a real newsy situation. So, you know, you kind of have to take that into account. So we've got, all right, so we've got that. Of course, at this point, we can draw kind of this channel with the August 15th low and the 30th high, and then of course the low from this morning. And what I want to see, so in terms of a setup for cable, okay, I will zoom in here. Let's make this candle so you can see it. So we talk a lot, of course, about daily reversal resistance support, weekly reversal resistance support. But as you know, you can do it on any time frame, and the 4-hour level is one to do it on as well, right? So that high, the close from that high is 30.06, okay? This channel, and again, this channel is not yet like totally confirmed or whatever, but let's say we were to get up here and trade in the 30.06, today or whatever, probably today, and then pull back a little bit. Where you'd want to enter on this, where I'd look to enter on this, would be about 29.40. Okay, the month open is 29.37. You've also got your 200 average on the 4-hour chart right there. Okay, so that kind of defends it, of course, and we've seen, excuse me, we've seen times, of course, when this average is pretty good in terms of support and resistance. So you've got that going for you. And what else you've got is this would be the channel center or the median line, right? Now, at this point, we're just looking at your simple channel. We're not looking at a so-called, original a fork. We're looking at a channel. And I wouldn't want to look at a fork yet. One of the things that I like to do, many of you, familiar with this already, but when you have a new low, high, low, and you can actually draw a bullish structure, this really is the first time that we can do this in terms of draw, say, a bullish structure, is you want to start with your regular channel, okay, under the assumption that it's probably corrective and that you're going to have resistance up here at the upper parallel, which in this case is going to be up in the 30.80s, 30.90s. So assuming all goes by, as planned, you can see how this is all kind of a fluid situation. It all is, right? We're taking in new information as it becomes available to us, and we are applying that to the chart with an idea that, just because what we were looking at yesterday isn't happening, oh my, there goes pound. Look at this. Yeah, this is why you wait for daily closes. So cable, if that's right, is this right? 29. Wow, that's nuts. All right, well, whatever. So let's say that we do end up getting back up here and then we come back here, then you'd be looking for support there. But again, trading the British pound right now, it's why I'm not sitting here throwing out orders in the pound hardly at all over the last couple of months because of stuff like this. This is great. All right. So getting back to this, that's how I'd look at it, okay? So we'll let the day finish out and see what we've got to work with, if anything, because at this point, this is really quite silly to try to trade something like, British pound that's going to move, 100 and some pips in a minute or 10 seconds for that matter over a headline. So yeah, let's just take it easy there for a little bit, right? All right, so now that I've wasted a couple minutes of your time and mine talking about the pound, let's move on. What's the headline anyway? German says position on Brexit is unchanged. This is great. Oh, that's awesome. Okay, so moving on, let's look at dollar yen actually. Ty talking about Aussie. Oh, man, of course we will take a look at Aussie. Oh, by the way, Ty, did you want to take a picture of this dollar chart? I don't know if it was US dollar or DXY, but this is DXY. So I'm going to leave it here for about 10 seconds, see if you want to take a picture of that because I forgot. DXY with the levels at 116. Well, that's going to be quite a ways away. I'm not sure. Okay, I'm not sure exactly what it is. 116 that you're referring to, but as it is now, we're just going to, I'm going to move on here and go to dollar yen. All right, so dollar yen. Let's see what the VIX is doing right now. There it is. All right. Dollar yen. We or me or whatever, I was looking for kind of a long off of this level late last week into early this week, and fortunately it just didn't. It's not going to happen here, right? We're looking for, first 110.50 and then like 110.27. But basically just looking for support on this line and never got it, right? So it's kind of back to the drawing board for me on dollar yen. And I mean, I guess if you get, a drop over the rest of the day for some odd reason, all the way down into 110.27, I'd be looking for support there. However, if we continue higher over the next day or two, I'd be looking for support or resistance up at the median line. Really, dollar yen's been a bit annoying lately because we've had I've had kind of these ideas on wave counts in that, we're looking to buy a B wave low and it never just really got to our level, not even the 618. And, even thinking maybe sell up here, but never really got much off that. So, I mean, it's just kind of, it's been a chop fest, really. There's been a lot to talk about here in terms of, trading, right? It's just like the levels just aren't being reached. So that's okay. We don't have to force trades in something. So at this point, I would tell you that I would actually keep on my radar 111.12, okay? And that is actually daily reversal support. So that's the close from 831, which also happens to be, of course, the monthly open for September, because the close on 831 is going to be your monthly open, okay? 200, 4-hour, 200 period average there as well. So really, I would just be looking at, that level, frankly, at say 111.11 for some support, where also for resistance, a little tricky here, maybe some scalps off these levels, but frankly, I would be holding out for something like 112.47, which is daily reversal resistance, okay? So nothing to do in the immediate. Sorry. So nothing to do in the immediate, but would pay attention again to 111.12 for maybe a buy the dip here, maybe today or tomorrow. Okay, let's get to some commodity currencies. By the way, cable seasonality, good low after this week, although it's kind of short-lived. So let whatever these news things have to play out, let them play out. And then be looking for a long after this week. If things happen, on the close today, again, like I was talking about before, then we might have an opportunity heading into the rest of this week. But other than that, I would sit tight, with the situation and the news and the rumors and the denials of the rumors. And, it's just quite silly. Dollar yen, a little mixed on the seasonals, but really do kind of start to turn down across the board after next week. So maybe we hang up a little bit and then turn over from the daily reversal level I was talking about, 112.47. Aussie. Aussie seasonal is really, still not great, really mixed kind of through this month. Kiwi is an interesting one, however, and one that I would be, looking at from this perspective, okay, for a long. So let's go to those two right now, the Australian dollar and the New Zealand dollar. Okay, so here we've got here's Aussie, okay. 2 updates ago, we did write about, or I wrote 71.45.60 as a zone for support. We have hit that. We hit it overnight, 71.45, 71.60 was yesterday. You see the blue line here, right? So we all know what that is. You simply go back in time here to Okay, that's this line. I know it's confusing because it's pink on this chart and it's blue on the other chart. So we'll make it blue. So they're both blue. All right. So that's what we're looking at here, okay? This is just the parallel, right, from 2011 high and 2013 high. And this parallel has been, of great use over the years. And I'm looking for it to be of great use maybe again here. So that's what we hit. And, if you're going to have a reversal in Aussie, kind of better be from about here, at least, for a while. If you get below here, I think it gets really, really, really ugly for the Australian dollar. But going back to maybe a shorter term chart for Aussie, here you go. All right. So another thing to like here as well is that the market, again, on the trend line from February, we are more or less trading on between most actions been taking place, I should say, since late June, between the 25 and the 75 lines, especially recently, right? So you can see here, you've got, support on the 15th, right? Resistance on the 75 line, the 21st, resistance up here on the 18th. We took this short here, got out early because I was actually thinking we could resume higher. But now we're back down here where we want to be thinking about buying again. I don't think we had any high volume levels last night. Let me take a look. No, we did not. That's okay. We are looking at a potential, I don't know if it's been triggered yet, but a long at 109.20 and Aussie key. So yeah, let's see if we get a little more traction on the upside today on the intraday. And if we do, I will be looking at a long probably near 71.60. Maybe that's the hourly close right here, right? The 71.60. The 4-hour close is going to be 71.73. So 71.75 might be the spot. And again, going back to the 60-minute chart, sorry for changing all of the time frames here so quickly, but that's where you'd be, and you'd be looking up towards the median line here, okay, which is going to be about 72.40 or so tonight and into early tomorrow trading. So we've got a good idea there, I believe. Take advantage of some initial downside now. Could this be a much bigger low? Absolutely, it could be. Again, if we go back and look at, this is that line, right? That was, here you go, right? That was resistance throughout 2016, okay? You had a good pivot here too back in May of last year. So, I would love to say that I know that this is a huge low and we should go long and stay long for weeks and months, but I don't know that. So what I would do first is I'd be getting out here, and then I would see how the market develops, right? See if you trade, say, up to, underside of here, 72.90. Really, the level you'd want to be trading up to is probably going to be around the 73.15, 73.20 area. You got this low here. If you came up there in an impulsive fashion and pulled back, you'd be able to buy it again. All right. So again, stick to the the present and what's at hand here. But assuming we kind of hold up into the rest of the day, I would be looking at buying down into 70, probably 71.75 or something. Okay. All right, let's move on to the New Zealand dollar. It's actually a bit firmer today and putting in a pretty good reversal day as well. Okay. Have not made it down to the channel. That actually can be a sign of strength when you're looking at potential reversal. It tells you, we call it a raised, or not a raised floor, but we call it a gap, right? You have a gap between where you made your low and your support area. In this case, that's the lower parallel. So again, you have, let's go hourly. For it to be a Kiwi bull, I'd want to see a good 5 up. So, if this is kind of 1, 2, 3, right? Maybe a little higher, pull back 4 or 5, then I'd be looking to buy a dip as it is right now. Marco asking, do you have time for a quick view on Kiwi yen? I sure do. I will get through this real quick, and I do want to show you guys a couple charts of what I'm looking at in the stock market. And after that, I will certainly take questions and we can look at Kiwi yen, absolutely. So this is, I'd be looking for a 5 up to buy a dip in the New Zealand dollar, okay? One reason for that is that, so like the Australian dollar's already come down to its level, so to speak, right? It's already, we had 71.45.60 in line, and that's a big area. It's already been hit. New Zealand dollar has not hit its level, right? The level where we were looking for Kiwi, or I've got marked down, is going to be closer to the 64.80s, okay? And that's actually the 786 of, you go to a longer term chart. You can see that's the 786 of the rally from the crash low in 2015. And oh, by the way, weekly reversal support is 64.62. That's the close from that crash low, okay? So, that is a level that I think we should be paying good attention to. Now, also, it's actually this one. Hold on here. Get rid of that. I do believe that I had some better parallels here. So down below there, is this too. So this is now a weekly chart. I know it's far from perfect, but I do like how you do cross lows here, and that would be a little bit lower down here. Okay, so that would be in line with your 618 of this entire move up. All right, from 2015 to 2017. So, you know, again, if we get a clean 5 up in Kiwi on an hourly chart, I will certainly be looking to buy a dip, and we'll then ascertain what kind of upside we have in the near term. But I do want to not forget that you've got kind of a lower level down here that's a bigger spot on the chart. So, you know, I'm not sure if there's any big New Zealand news coming up here this week. Let's see. I don't think there was. No, there's not. Kiwi's quiet on the news front these days, but you never know, right? Don't forget, they've got a new government and everything, right? So you could have some sort of a surprise come out and jolt the market one way or the other. But either way, that's it. It's the best thing about, you know, the way we're looking at markets. We're not trying to necessarily anticipate or trade off of these news. We're trading off the levels, which is all that really matters. Okay, dollar CAD, and then I will look at some indices, and then I'll take some questions. Okay, so dollar CAD, extremely strong. The bigger setup here is real simple. It's just looking at, you know, if you get a dip, we want to see support probably down this 30, you know, 66, you know, 30.78 region. You know, some point, maybe not, it might not even be this week. It might be next week or something. So that's where I'd be looking. At the same time, you know, I wrote about 32.47, which is a square root level, which you can see on this chart, a little different chart. So 32.47 is a square root level. You can see we've had some pretty good turns off of square root levels this year. I mean, your year-to-date highs in June are on this square root level, 33.59. The lows from actually, you know, what, like 2 weeks ago, or maybe a week ago, the 28th, that was on this square root level. So, you know, without really much in the way of any other technical level up here, kind of thinking that 32.47 could be a spot where you roll over a little bit for a pullback. You know, I was hoping obviously that we'd get a little more on BOC, maybe get a quick spike as we, you know, markets do tend to spike into highs and lows during and after big events like central bank decisions, but that did not happen. In fact, dollar CAD's awfully quiet here during and after the BOC. So I'm not going to go into too much there. That's about it, right? I'm looking there, 32.47. I'm also looking at maybe 30, you know, the 30s, 60s, 70s area for support. All right. Okay, so spots to pay attention to for equities, okay? This is actually the QQQ ETF. So I've got a cleaner channel to follow here on at least shorter term. So like this is the NASDAQ 100. This would be the CFD. And, you know, we did hit the big resistance up here, okay, last week. That support's going to be, you know, look at the 4-hour average, look at the, this is your 75 line. Look there, okay, that's, you know, simple 74.50 or so. That's where I'd be looking there. Frankly, this move doesn't really look done. It looks like this is a 1, 2, 3, 4, you're gonna go 5, but you got to see this hold. So look at 74.50, okay, on the NAS 100, that is the CFD. On the Qs, which is something I would trade being in the US. So I've got a channel from the April low, and it connects the June low, okay? So I know it kind of cuts through this, but you can see that it does also follow or identify pivots along the way. So you've got the pivot here in May, obviously support here in July, support here in August, and that's going to be pretty close to its 200 average on the hourly chart. So also have the high here from August 9th, and you've got the gap, okay, right here from August 24th, right? So that whole region, from 182 up to 182.50, right, which would actually be in a couple days. Bottom line, this line, okay, that is it. That's the line. Need to hold that line in order to kind of stay, in my opinion, constructive near term on, the NASDAQ in particular, but probably US equities generally, considering the NASDAQ's really been the driver. It's been the one to break out. The most. It's been, the Dow's hasn't even broken out at all. It's been the one to break out. It's been the one to, fall on the downside the most as well. So it's really the leader, right? It's the one to look at. In terms of SPY, I'm going to show you something else on this, which might be quite interesting to you on an analog. So on SPY, similar story. Beautiful channel from the April low. This one's a little more conventional because it connects April and May. You can see the tops, resistance identified, just beautiful resistance, pulling back, kind of looking for support pretty close to now, really. This is the 75 line. You can see that's been resistance before. It's not perfect. You do have the gap from, what is that, from the 18th? Or sorry, 18th, from the 24th, and that's going to be 287.47, okay? And that would be an area to take note of for a bounce in the S&P, okay? Now, this to me is kind of a choppy mess. Like, I don't know if you can call this 5 down or whatnot, but I think we'll probably get some good information on, what you want to see is first you want to see a bounce, and I would concentrate on that first and foremost, right? So concentrate on 287.47. If you start to get a bounce from there, let's see what it looks like. Are we going to go up in 3, or are we just going to go up? First things first, 287.47, place for a bounce. You break that, then you can start to think about something on the downside to the next level, which might frankly be the median line down here. Okay, one more thing that I'm going to show you, and then we'll go to Kiwi Yen. All right. Okay, so this is the Qs, and the overlay is actually 1929. Look where we are, okay? What you'd want to see, or what I want to see, is really a big drop, maybe tomorrow, something really bad, and then we go higher again. So this is all a work in progress, as it always is. But what's interesting to me is that the lows in this matched up pretty well, right? Like, you've got a low here, you've got a low here, low here, low here. Your next low is right here, okay? 9.6. I have it written as 9.5, which is today. It's really not. I guess it's 9.6, isn't it? Either way, you get the idea. So I wouldn't go full bear just yet. You know, that's why I say it's so important to simply follow this trend line back here from April, okay? You can see if I go back and look at the Dow Jones, back to, sorry, it takes a while to scroll back in time. Okay. So this was where we started the overlay. We started it with essentially the early January high, and matching that with the NASDAQ on the early February high. So, you know, essentially a month later. And from there, the shape is awfully similar. But here's the trend line that you followed back with the Dow, right? You can see we hit this, we bounced. Once we broke it, it was kind of all hell, ended up breaking loose. So that's why I say with the NASDAQ that you've got to follow this trend line, because if you do break this one, then you can really say that maybe we have something in play on the downside. I would also watch to see if you hold it, come back and find resistance, say right here, right? Isn't that kind of what happened back here? It's exactly what happened. You can see support, you came back and find resistance on the 25 line. So work in progress. Let's see how the next few days shake out. Again, by definition, this is going to be something that I don't expect to happen because, well, it's out of the realm really of you know, kind of possibility from a mathematical standpoint, right? Like that would be what kind of a sigma move. But either way, the shape is too close to ignore, so we'll follow it. Okay, now I can go to questions. So we had a question on, and well, I'll keep this updated, right? This Dow QQQ analog, right? We'll keep it updated and see how things play out, because you know we don't want to forget about it. If we start to continue to, or if we resume, you know, the relationship, then might have absolutely, you know, a great opportunity. All right, Kiwi Yen, we had a question on, and I'll take some other questions if you guys want. So here's a daily chart, and this is the channel, really the angle of the channel. Went back, and it's probably better on log. Actually, it's tough to say really because here's linear, and linear went back and actually tested these lows, and you have a resistance here. One thing's for certain, it's a downtrend, right? Let's see if we can get something on from here, right? Let's see if we can find an angle that the market's trading on here. And there you go. It's pretty good. I would actually stick to this as far as the nonlinear. All right. Let's go to daily again. That. I will tell you that right here, I've got no trade, but I'll tell you, Marco, what would offer me a trade in this realm? would be kind of a move up towards, I wouldn't even pay attention to the average. I would look up at the median line, right? So, you know, if we got a nice three-wave move up off the lows here, two equal legs, it's going to get you 75.54, right? Something like that is going to be on the underside of this longer term trend line. It's going to be a little bit above the median line. That's fine. The median line hasn't even really been very good in terms of resistance, but you can see this parallel has, okay? So I'd be looking up here, 75.50, okay, that area. You got up into there, I'd look for resistance. So, you know, as we sit here right now, you know, I don't think it's completely inappropriate to look on the upside. Pay attention to 73.15 or so. If you pull back from here, might try to make yourself a nice little base. But that's all I've really got in terms of Kiwi yen, right? So if I were looking to trade this myself, there wouldn't be a trade here for me at the moment. But there could be if we got up into the 75.50s, then you might have a short opportunity. Are there any other questions that I could take? Going once, going twice, and nada. All right. So kind of waiting for some things to clear up here with Michael, and you know, he'll be back soon. I know he will. Is in my thoughts and everything. Trading wise, I think the biggest, you know, chart to pay attention to really from this webinar right now is this. So, you know, did we put in a top on a flat in the dollar? You know, we may have. We can go down in 5 here, really start to, like another drop would really favor the idea that we did. And that point, you know, you can bet that we'll be on the short side. Marco says back to dollar Swiss, is 68 or 96.80 support or just a reevaluating point? So Marco, 96.80. Hold on. I'm going to bring in a different chart. This is our, oh, I know what. No, I wouldn't reevaluate it. I'm just saying that's where I would be looking to tighten up my stop, because those are the lows down here from yesterday. Yeah, you said, yeah, you're right. I was like, where did I get that from? But no, I would not be reevaluating. I would just be tightening the stop and let it go. Look, this is a really nice, besides the, you know, we talked about the beautiful pitchfork we've got here, but aside from that, the momentum profile is really bearish on this 4-hour chart, right? You've got, you know, the deep oversold kind of, you know, 3, 4, 5 stabs at oversold levels here. That's bearish, right? Now you don't want to sell down there, but you want to wait for the rally like we did. And, you know, in a bear market, especially on the 4-hour chart, which tends to align pretty well with my trading and time frame and all that, you want to see, you know, the market at price highs. You want to see RSI fail near 60, and that's exactly what happened. Just like on an upside move, you want to see it kind of find support right near the 40 level, unless you go into one of these and you don't get a chance to do anything. But you can see the idea here, right? Overbought 40 or 40, overbought 40, right? 40, overbought 40. So we have the opposite situation here. That's a good sign. And yeah, there we go. Yes, Marco, my take profit remains 95.30. Obviously, if that changes, I will, of course, update it either in the update or via Twitter as always. All right. All right. Okay, guys, I will get this archived for you as soon as possible, and have a great rest of your week. Okay, thank you again for your time.